Welcome back. Well, the market surged in trade yesterday, but this morning it seems to be a rough start with a rout in the global equities. Lata's here to give us her sense in terms of what we can expect in trade today. Lata?
Well, in the first place, I thought yesterday's rally was rather unwarranted. And bankers were telling us through the day, I'm still unable to understand why the market took away so much of a positive from the State Bank of India's announcement that it is ready to buy more loans. As bankers and NBFCs on the channel were explaining, it's not a very easy deal. Bankers will cherry pick. They will demand that a 100 crore loan be available to them for 90 crore. In fact, bankers went to the extent of saying that we have also given loans to NBFCs. If they sell us the underlying, we'll say cancel the loan. Why do we give them money at all? It's just that some of the banks said, yeah, we may also give them money because we don't want them to become an NPA. And therefore, we would, throw a line and take some underlying assets in exchange. We will not extend further loans to NBFCs, but we may not necessarily cancel their loan. The net one got from both banks and NBFCs is it's a good idea, but it will take time to get executed. And the problem of banks throwing a line is only part of the entire issue. The big reason why we had fallen on Monday was also because we got the mutual fund numbers and they indicated that liquid mutual funds had seen big redemption. Now that 2.1 lakh crore mutual funds could not pay away to the companies in the form of cash. They didn't have last month. So they gave them many of their bank CDs which they had. So, the companies can't bring back money. They are themselves holding securities for part of the investments they made. Some of them have taken mark-to-market losses. And when they see global markets in a tailspin like it has been over the last 24 hours, the companies are not going to come and put in money because they will expect further mark-to-market losses. Liquid funds, you're not used to a mark-to-market loss. You just expect that you will get 5-6% at least on a bad day. So the problem is that we may have two things to do. We may have to roll back yesterday's excesses and then react to today's, reaction. The short point is it's a good step, but it will lead to a defreezing of the bond market provided no further accidents happen. One downgrade, one more, somebody defaulting can push back the recovery. So markets ought not to have overinterpreted the news yesterday.
All right, Lata, thanks a lot for that. Market ought not to have over-impressed itself to the move yesterday. But with that, what we do is spoke to a whole host of bankers, P.K. Gupta of SBI, KVS, Manian of Kotak Mahindra Bank. Here are what they had to say.
Buying of the portfolios does provide them the long-term liquidity. So at least, at least in the short term, they will be, off this problem. They will not have to keep looking to the market to roll over their whatever borrowings they do from the mutual funds also. And then it will give them some more breathing space in terms of restructuring their entire balance sheet. Many of the NBFCs have grown very fast. I think some of the ratios do look scary. So for the banks to lend them large amounts of money, probably they need to look at their ALM situation. So that would be a time-bound process that will take more time.
Better NBFCs. As a bank, we are willing to lend even today. We didn't stop lending to them even after the 25th event. So I don't think we see a problem with lending to the good NBFCs, number one. And of course, the portfolio purchase is another option that we are also looking at in some selected cases.